could probably summarize today's episode in 2 words: birth and no. The best time to start banking yourself is immediately when someone is born. You actually can't start any sooner. There's also a lot more availability to get started at any and all life stages and circumstances than a lot of people realize. We're going to do some myth busting today and explore some of the little known opportunities that exist to take control of your financial future. What's amazing is that life insurance is a lot more inclusive than many people realize.
Hey, and welcome to Wealth Wisdom Financial Podcast. We believe when conventional financial thinking doesn't get you where you want to go, you need wealth wisdom. Please hit that subscribe button. And if you're watching on YouTube, give us a comment below. And if you're listening on podcast or anything like that, give us a review. We'd love to hear from you. We'd love to know, hey, we're not just talking to ourselves. And it gives us some encouragement and feedback. So today we're going to go over some of the main reasons people assume they don't qualify to use the bank on yourself concept, which is based on a properly designed whole life insurance policy. We talk to people all the time who have reached out to us. They would have reached out to us sooner or introduced a loved one to us sooner had they known what we're about to share. They kind of count themselves out, right, before they even have the conversation. So put your seatbelts on and your tray tables in the upright positions and prepare to take off because we're going to go fast.
The big idea today is that more people could be included in the bank on yourself revolutions than you might think. And we dare you to think of someone in your life right now that you believe does not qualify. Go ahead, bring that person to mind. We'll wait. Okay. You got it. You got someone in your imagination right now. What about them makes you believe that they would not qualify? Common items many people claim are that they're too old, they're too young, they're too sick, they're too pregnant, they're a smoker. They believe they don't qualify because they have a disability, they're overweight or underweight. Maybe there's a hereditary disease in their family. The list goes on and on and on.
Yeah, we've seen all of them or a lot of them. Here's the fun fact. If you have the right professional who has in-depth knowledge about various companies and a smorgasbord of potential products to use, there's more opportunity to start a bank on yourself type policy than you think.
First of all, let's talk about that first part. Why would we start when a baby's born? Isn't that kind of morbid?
Well, we absolutely hope that every baby lives a long, full, joy-filled life. Not all of them do, and that's a sad thing. And the ones who do have so many opportunities to utilize the cash value without breaking the compound interest. So if you set that up, that's an amazing thing that they have for their life. Perhaps the way to think about it is this: what better gift to give a child than uninterrupted compound interest for the rest of their lives? By starting a policy at birth, we're sowing seeds that would likely pay dividends, right, for the rest of the young one's life, no matter how their health changes. It's also planting future benefits for any grandchildren, right? I mean, we're talking about a child that's not even just barely born, and the children of this baby that's just been born. What better gift to give the third generation than that?
Now, if you're listening to this, we're going to go out on a limb and guess that you probably did not bring a newborn to mind when we asked you to imagine someone that you don't think would qualify to be part of the bank on yourself revolution. You might have brought someone to mind with a whole medical history or other circumstances that you believe disqualify them from using bank on yourself.
Yeah, one of our favorite parts of being a bank on yourself professional is building relationships with life insurance underwriters.
Yes, we love you, life insurance underwriters that are listening right now.
Yeah, I mean, really, it's kind of weird. But that's because we can advocate for our clients and on our clients' behalf. And literally, I'm calling them often. I'm calling, you're emailing, but that's usually how it works. And we're talking to them regularly saying, hey, what do you think about this person or that person or this?
So here's a few examples. One of my clients is a parent that was trying to open a policy on their adopted child. The underwriter was using American build charts to determine if the child was growing well and if they're, kind of normal, or if maybe they were undernourished, because their height and weight was so low compared to most American children. So it was kind of a red flag. The underwriter brought it to me. Can you double check their height and weight? And sure enough, that was true. But I took the extra step and I reminded the underwriter that this child was adopted from a specific Asian country. They had a different cultural and hereditary background than most American children. And from that Asian country, children were typically smaller than American children. So maybe they needed to use Asian build charts or something like that. And the underwriter was like, oh yeah, that makes a lot of sense. Approve the policy right away.
Yeah. And then I had an adult who was trying to open a policy for themselves. Now, we found out in the process that they were declined for life insurance previously because of a hereditary condition, right? So, that might be, hey, you have something that is uninsurable or potentially. Yet, here's the funny thing. They were adopted. So they couldn't have gotten the hereditary condition that their adoptive father had. I mean, because they were adopted, obviously. We shared all the details of the previous misunderstanding and the actual reality, and they were approved with a better than standard health rating, the best health rating class in general, right?
Yeah. So by taking those kind of extra steps, clearing up misunderstanding and sharing more information, we want to get lots of people approved that had even been declined in the past. We've been able to get stroke, heart attacks, or cancer survivors approved.
As far as people with disabilities or people who are handicapable, don't let that immediately rule them out either. Depending on the cause and severity, they could potentially still be approved.
Now, I heard a myth recently that I have to totally dispel. That I heard somebody say that they were told by 2 life insurance agents that pregnant women can't get life insurance. That made me very angry because we know we've had pregnant women get life insurance before.
Yep.
In the first and second trimester. It's totally a breeze. For some companies, they won't start the policy officially in the 3rd trimester, but you can still apply in the 3rd trimester and then get the policy started as soon as possible after kind of those first postnatal checkups.
The same goes for people who are overweight or underweight, who have diabetes, who smoke, or even in their 70s or 80s.
How can we possibly say that all these sorts of people could utilize the bank on yourself concept? How could we possibly have all these types of individuals as clients? There's 2 reasons.
Number one, with the best life insurance companies, underwriting life insurance is always done on a case-by-case basis. And the underwriters actually want to approve people. They want to say yes. They will take individual circumstances into account. Even when there is a unique situation, the best bank on yourself professional will have a close relationship with the underwriters and be able to advocate on the applicant's behalf.
So I've got a fun story about this. A very unique situation. This was a few years ago, maybe 4 or so. And a client, there's a question on the application of what, do you use any supplements or medications? And they took a supplement every day called CBD, a couple drops on the tongue, just to improve their overall quality of health. And they put that on the application. And it was the first person ever at this life insurance company that had put CBD oil as a supplement on their application. And the life insurance company was like, oh, wait a minute, there's all these questions that came up, red flags. Thankfully, I was able to be like, hey, go down the street. There's CBD oil on the shelf at CVS, right down the street from the life insurance company. Go, look at it, read the labels, see that it's available. It's approved by the FDA, whatever it is. And they were like, oh yeah, that makes sense. And they approved this woman with a better than average health ratings. How cool is that?
Yeah, which is another crazy, interesting thing, right?
Yeah, we come across this stuff all the time.
The other reason that we could possibly say that all sorts of individuals could utilize the bank on yourself concept is because they don't have to be the insured on the policy. As long as they have an insurable interest, they could be the owner of the policy and control the cash value. They could pay the premiums, take the loans, repay the loans, and so forth.
In other words, it's possible to utilize the bank on yourself concept based on opening a properly designed policy with someone else as the insured, someone else whose health is taken into account and those kind of things. But the owner doesn't lose any of their rights and privileges of ownership.
So a big question we hear all the time is when someone does have a health concern or they have a few more candles on their birthday cake is whether they could just go ahead and have someone else be the insured because the policy would cost less. We hear this one all the time. Here's the thing they often forget. One of the key concepts for a properly designed bank yourself type policy is not, again, it's not to get the highest death benefit for the least cost. Instead, we want to get the lowest death benefit possible for the maximum cash value over time. What the principle translates into is that one person's policy might have a very different death benefit for the same premium, but the cash value could be very similar.
So let me give you an example. Let's take the two of us. Here's a fun fact. Brandon is actually about 7 years older than me, and he's also male.
Obviously.
If we each have $10,000 to start utilizing the bank on yourself concept, and we designed the policies for the proper ways, all those kind of things, Brandon would actually have a lower death benefit than I would based on age and gender alone, but we could have the exact same or roughly the same cash value.
In the case of an older parent and younger child, whether adult or still juvenile, we encourage making sure the child is protected in case of the death of the parent first, and then insuring the child. If we can do that without giving up access to the cash value, it's often the right call to make. It's kind of like putting on your oxygen mask first before the oxygen mask on somebody else, since we're using the plane analogy on
taking off. Yeah. This is where we have to remind you that every single policy is custom designed and tailored to the individual and family's family goals. This is actually where maybe the plane metaphor breaks down, because everybody gets the same plane ticket. All the seats look the same kind of, except there is first class. Maybe we say, we're giving you a customized first class experience. And this part of it is because bank on yourself professionals also have a fiduciary duty to look for what will benefit their clients and their clients' families as best we can, given the resources available. And it's a collaborative process of learning and confirming what fits each person best.
So the main point of today's episode is never to say no for the person who you brought to mind earlier, or for anyone else for that matter. Instead, encourage them to meet with a bank on yourself professional and explore the options, right? If we could add more coal into the fire, we would be remiss if we didn't mention that bank on yourself is also not what we do exclusively. We have access to all kinds of other products that could be a better fit for someone's unique situation. We're not going to just say, oh, do this and that's it, right? There might be something else. What if there's a strategy that's a perfect fit for them, but they never hear about it because you or they assume bank on yourself won't work for them? And it might not, but we have other tools.
Yeah. One of the reasons we've aligned ourselves with the Bank on Yourself trademark, which it's owned by or created by Pamela Yellen. She hasn't reviewed this video or anything like that. That's her trademark. We're able to use it because we're Bank on Yourself professionals, but she hasn't reviewed this. Anyway, one of the reasons we've aligned ourselves with that trademark is because our mentors and coaches empower us to do more for our clients than the amazing properly designed whole life policies. So while we specialize in Bank on Yourself and we love it and we champion it and it's amazing, we have partners we work with to provide all sorts of products and strategies to help Americans create a smarter, more stable financial future and be set for life without taking unnecessary risk.
So what are you waiting for? Do you want to be set for life without any unnecessary risks? Or your friends, right? If you've never introduced that person who you thought of or brought to mind earlier on this episode, we encourage you to reach out to them and introduce them to us. have them, send a text message or something like that, right? We have a little link that we can use so that you can share this to them easily.
Yeah, and we actually put a text message script in the show notes that you can copy, paste, and send to them. We'll also have a link to our calendar that you could share so they could just skip straight to scheduling an intro call with us to ask their initial questions, see if we're a good fit to take the additional steps from there. I didn't put this in the script, but I want to add a quick thing here. Let's say this person is a parent or a child of yours, an adult child or a aging parent. One of the things you can do is a 3-way call or a 3-way Zoom with all of us. I love doing this. It's a lot of fun. Brandon does this too. That way you can make the introduction and you can make sure that we're giving them the first-class customer experience that we gave you or that you would expect us to give to everyone and help them feel more comfortable, all those things. That's actually an awesome option that we have out there too.
Awesome. Well, thanks for joining us. Don't forget, hit that subscribe button and live long and profit. The topics presented in this podcast are for general information only and not for the purpose of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.